Hi traders, welcome to the week ahead. Um, I've purposely left this till later today because I wanted to see how the market opened, and we're now about 15 minutes before the London Open. I also want to use my platform, my trading platform for this week's look at what might be on offer. And one of the things that I want to say before I start is that I've come back to using some indicators. I want to share those with you. I'm not saying you have to use them. I'm saying these are the ones that work for me. And I basically have an entry, a baseline, an entry, and another confirmation entry. And then I have a volume indicator that I use just to give me an idea of if there's any juice in the tank, and using a currency strength meter too that helps. I'm just finding that in these volatile times, it is really important to rely not just on your usual strategies and stuff, but I've been doing some fine tuning, and it's the technicals that are more important to me right now in this environment. I am aware of the fundamentals. You know that I think that fundamentals are a very powerful tool, and they work hand in hand with technicals. But the fundamental landscape, if you like, at the current market conditions is very, very hard to read. So with that being said, there's a couple of other quick things I want to say before we get into it. Is one of the questions that I'm getting through my emails is, why is the American dollar, the US dollar, still holding up, and at times showing a bit of strength? Basically it's a reserve currency. Nothing's changed. The US dollar is king. It hasn't been unseated. Not likely to for many years yet. And so in this market, which creates fear, there is quite a demand for cash and quite a demand for US dollars. And that is why at the moment you're seeing the US dollar holding up. Because a lot of the debt in other countries and the loans that America has towards certain situations, and the debt that America owns, it's all held in US dollars. So just be aware of that. There isn't a lot of hope in terms of this virus thing being turned around in the short term. It's going to take a while to get through. So trade sensibly, and I think your best option is technicals. Right, let's get into it. Of course, I'm got to do this. All information in this video is for educational purposes only. The information in this video should not be taken and used as financial advice. By watching this video, you agree not to hold the producer of this video seriously liable for any of the information shared. You agree to accept all responsibility for any decisions you might make regarding your trading or your investment choices. Trading instruments such as currencies, indices, stock market, anything with leverage has a high degree of risk. And that high degree of risk means that you can make money, but you can lose an awful lot of money. And should you consider investing money into trading these instruments, it is better that you seek the advice of a registered financial advisor if you have any questions relating to that investment. Okay, let's get right into the charts now. I'm very much focused on the main currency crosses. For example, in the Australian currency crosses, the Aussie USD is the main currency, and I'm not really worried about trading these at all, Aussie, New Zealand, because they're two neutral currencies. Aussie Swiss has just continued to come down. I don't trade it south because trying to hold it long term is not good for me with swap fees. Still interested in the Aussie CAD and Aussie JPY, but only if I begin to see the Australian dollar against the US dollar begin to strengthen. And if the Aussie USD begins to move down significantly, I then will go take a look at particularly the Aussie CAD to see if it's going to move down. So very simply, I do have this strength indicator, so keep an eye on this. My indicators are simply, this is my baseline. It's a Nikimoku Kinko line, and I've got everything else on the cloud, Ikimoku cloud, turned off. Not interested in it, but this serves me very well. I trade centered around a daily time frame, and I'm interested in these moves here. This is an indicator. This is my secondary entry. But I can only go if this and my baseline cross lines up also with this trend indicator that I use here, which is a moving average. Here's what I use for volume. All of these indicators are free, and if you want more information on them, just tap me in the chat room. But after each daily candle change, I am watching to see where the daily candle changes. I'm interested in these moves here. Notice the cross and the close. These moves here, they're the big moves. I'm not interested in chasing the little stuff. I do have a London breakout strategy that I use sometimes, but I'm mainly trading the pound USD at the moment as far as the London breakout goes. So with that being said, there is no trades at present on the Aussie CAD, Aussie Swiss, Aussie JPY, Aussie New Zealand. I want to go straight in and look at Aussie USD. This thing for some reason is running really slow. There we go. And I've simply, I have had a suggested buy signal on this. And I'm not interested in taking it, number one. The signal is at the close of that daily candle. I don't have enough juice in the tank in terms of my momentum indicator. And you can see it down here. It's not that good. So that is a no trade, but I am very bearish on here. My normal practice would be to put a pen in there, but because of this key area of resistance, I'm not prepared to try to trade this into here. I would have to get a close up in here before I am ready. So there's no trade on that. I'm actually looking for another move down. I believe that the Aussie's going to weaken. I don't have that yet. There's nothing in terms of CAD Swiss. I've just got my range there. Now you've got to understand that the CAD Swiss, like the Aussie Swiss, are carry trades, but right now carry trades are coming off for a long way away until we get through the coronavirus and get out the other side. Don't trade the Swiss JPY, CAD JPY. There is no trade for me here at the moment. It would have to get up and close above my baseline for starters. We still are bearish on this. I did trade from down here, and just very quickly, all I did was put my pending order in there. The big stop losses when I trade, and so I cut my lot sizes down to suit the size of my account. but I always put it up above the daily candle here. And you're looking at big stop losses, but you have to do that in order to get the big runs because of the volatility sometimes and the pullbacks that you get. So I took profit down here. You can see I left this line in here. That was my profit target, so that was a nice trade. Euro AUD, I'm watching this, and this key area of 179 right now, just because it's given me a signal, I don't have the juice in the tank. The red line's got to be above there, and it needs to come from down in here and point up. When these bars get over this line, when it's lower down, you can see the big move that we had from here to here. Those are the trades that I'm after. I'm not interested in this market environment trying to take too many short-term trades. And then I just take a look on the strength indicator, and that tells me right off that there is not really any trade at all for this pair at the moment. It's the Euro AUD. You can see that AUD is reasonably strong, and the Euro is just a couple of bars weaker here. So I don't trade when they're neutral like that. I'm looking for this, something like this, US pound. Okay, now that would be a good sell right now, but I've only got 3 minutes to go, and I am going to wait for the change of daily candle, and I'll wait till after this video. So no trade. There's nothing on the Euro Swiss at all. It's holding under 106, and I want to take this north, but it's not giving me a north buy. This was the trade down here, but you can see how messy it is. You know, just it's not nice. Lots of volatility. So I've been tending to stay out of it. Not really happy to trade it at the moment. I am in the Euro CAD, and I'm actually just about to get stopped off, and it looks like I'm about to take a loss if this keeps going up, and that's fine, but those are my profit targets here. That was the trade entry a couple of days ago was just under here, so not looking too good at the moment. That's the hourly chart. You can see it on the daily. And we'll see. If I get stopped out, I get stopped out. And the key to success is keeping your losses small and your winners bigger. I'm always trading to 1 to 1 to 2. That's what I'm looking for in all my trades, especially in this volatile market. So probably got to get done on that one, but that's okay. I'll live to fight another day. It's only money. I'm still making good dough, so I'm not complaining. Now, this has given us a signal, but I'm not in it yet. I'm reluctant to trade the Euro pound just simply because of the volatility around Brexit. But if I was going to trade that, I would just be putting a pending order under here, and I'll be hanging around for a couple of hours in the London session, and I'll make a decision on whether I put a pending order on this before I go to bed. But that's where I'd put it, under the signal. At the moment, you can see that it's just pulled off, and if this carried on up, I'd just take the pending order off when I get up in the morning. Euro JPY, there's nothing here again. Euro ZE, a bit like the Euro AUD, key level. I'd love this thing to either break it or look for a bullish signal here. I don't have any juice in the tank. You can see there was a close. It didn't even close above here. There's the close down here. So I have no signal, and we're still red for a bear move, so I can't go in on that. No point in wasting a lot of time. The Euro USD, I am waiting to see if I can get a close below some key areas. I want to see a close below 110. I believe that that is a real key level here for the Euro USD. Now, currently, for those that use the 200 moving average, we're above the 200 moving average. But I'm expecting, yeah, that's where I want it to be. I'm just going to see if I can put that in right. Annoys me for some reason. This platform's going real slow at the moment. It's like a slow boat to China. Sorry, guys, but there we go. That's the key area. If I get a break below here, I'm expecting another move down. So I'm watching that this week. Probably not going to get it till later in the week, but we'll see how that goes. I'm not trading the pound AUD until it breaks out of this range. So no point in spending too much time on that. Those are the key levels I have marked off here. Off the daily chart, resistance and support here. If there's a possibility I would trade this south down here, there's enough pips in it for me to trade, but I'd need to see a really good bearish signal, and I'd need to see real weakness. And even with the strength indicator, here we have the pound AUD, it's suggesting that that's the weakest pair to trade south, but I'm not seeing the action there right now. So just because you have a strength indicator, just because you have an entry, doesn't mean you should take it. You've got to take other considerations into account and make sure that everything lines up. So right now there is no trade. That might change in the London session. Who knows? Pound caddy, very similar to the others. This is the range that I'm watching. Pretty simple stuff. 1700 or 173, sorry. If I get a break below there and a close, and then get a signal and I get a close below this baseline, I'll be interested in coming south. Pound JPY, sorry, pound Swissy. I'm actually watching this. I haven't got an entry yet. I've got part of an entry. I've got the volume up. I've got my second confirmation entry arrow is up, but I haven't got the first confirmation, which is a close above my baseline. So at this point, I will be staying out of it, but I'm hoping to see this give me an entry this week. So that's on my watch list as well. Pound JPY, watching this closely. Key level is 133, and you can see that right in there. It's going to play havoc. There we go. Just somewhere in there, that's near enough. Looking for a bullish signal. So I'd need to see an engulfing candle and the close above my baseline, and providing this is all lining up, then I'd be prepared to have a trade. Right. Just takes a wee while. I don't know why. Okay. There's nothing on the pound ZD. There's the key ranges. I'm not really interested in trying to trade it unless I get a close below this level here, and then I'd go south. If I came down here and I got a good bounce off here. I wouldn't try to trade it from here to the top. It would have to come down, maybe even dip below, then break back in, and then I'd be interested in a trade to the top. So I'm keeping an eye on that as well. Then we come to the pound USD. Just very quickly, there's my breakout boxes there. You can see that on Friday it was a success, and then on Thursday we had a beautiful move up here. I used the hourly time frame. If you want any information on this, just let me know and I can shoot you a quick little video to show you how it works. But I will hang around for an hour or two, see if it fires this time. Haven't put my box in yet, not until after the video, and then I'll put it in. We come to New Zealand CAD. There is no trade here. Again, if I was going to trade it off the bottom, it has to do this kind of thing, and then I trade it from here. That's the entry, not here for me. Things are lining up, but again, because I'm sensing more weakness in the New Zealand dollar, I did not take this trade last week, and I won't be taking it from here. I'm looking for a break back down here. Now, if it wants to pull back up here, this is my buy zone in and around this area, just up in here, anywhere up in here is my sell zone, not buy zone, sorry. New Zealand Swissy, no trade. If I get a close above here, I would have a crack of it, providing I see real strength in the New Zealand dollar, which I do not see at present, so no trade. New Zealand JPY is very similar. We've just had this massive move down. We're definitely in a downtrend. This is the range, and unless it breaks up and closes above 65, gives me a really good strong signal. I won't be trading it, because at the moment there just isn't any investment money interested in a carry trade. New Zealand USD, we've had a really good run up here last week. I was able to take some pips out of it. That was the trade way back down here. One of the other things that I do with this technique is that where I get separated from my baseline from here up to here, and I get a turnaround, I take the trade back and close the gap. I would not trade it from here into here. It's trading into support. Just trying to get that to, yeah, there we go. 61 is the key area for me, right in there. That's near enough. I will not trade in to resistance when it's this close. So I am looking for, I take this as the sort of first push down, bit of a retest, pull back, and then I'm looking for another move off here. Whether I get it or not, we'll just have to wait and see. But that's high on my list at the moment. I'm looking for a close below my baseline and everything else lining up. This would have to be red as well. USD CAD. Nothing. I'm looking, I'd really like to go bullish on this at the moment. I'm not really happy to take it from this level here. It broke down key level at 140, and then it's moved back off this today. I have not taken the trade. I don't have in any of my signals lining up, so I'll be staying out of it. If this breaks down here, and I get a good move, I'm possibly considering a pending order under the low of Friday's candle, just somewhere like that. And I'll look at that before I go to bed or when I get up in the morning. So I'd just be putting it under here, like that. Right, let's move on. USD JPY. Here's a prime example of what I mean by the gap. This was the original gap entry down here, and I was in that and managed to pick up a number of some good pips out of this. But when it topped out here at 111, 112, and I saw it slowing up over the last few days, early last week, this was the trade that I took on the USD JPY, just by having a pending order under here. I got taken in, and the rest is history. I took it off the table before the close of the weekend. So now I'm just waiting to see if 107 holds. If we, I really like to see some sort of retest up here, and then I would be keen to take it back down. Or if we get a bullish signal from here, I would have a crack at trading it up, but I really like to see it come through it and then back up before I trade things off the bottom or up and down through the top before I trade it down from the top, if that makes sense. USD Sing, no trade at the moment. There's just looks like it's going to go sideways for a while. There was some bad economic data that came out of Singapore, and I do have pending orders waiting on one of my other platforms to have a crack at it. Gold, not a lot to report on that either. We're in a range right now, and we don't need these pending orders in here. I'm just not taking huge risks right now. This has been so volatile that I've only been taking small trades. I've just been taking 10 cents, 20 cents trades. It's just been so volatile. I've caught a lot of this and caught a lot of it back. I'm not being greedy. It's just that the market is so fickle and so volatile. I'm not willing to put big lot sizes at risk. And besides, since I withdrew most of my money off my accounts, I'm only dealing with small capital on each of my accounts at the moment. So I'm limited. The most I could trade would be a 50-cent piece, 50-cent lot size at the moment because of this account. But I'd rather have my money in the bank in these uncertain times, and I'm looking forward to growing it from here. And then when the market settles down, I'll put my money back in so I can trade bigger lot sizes. But I can't see that happening until the later in the year and we get out the other side of the coronavirus. So right now, the key areas are 1630-ish to 1600 on this trade right here. I really want to take a trade if it breaks below. Now, one of the reasons that gold has traded back so low is because a lot of the people like JP Morgan, hedge funds and banks and Goldman Sachs and all those guys, they need to stay liquid and they need to stay afloat. So some of the big investors are actually selling their gold, and that's why you saw a bit of a sell-off here. Gold is not really acting as a safe, as you'd expect in these troubled times, as a safe haven. Once things settle down and if the US dollar begins to weaken significantly, then we could see another decent move up. But right now, I'm just trading at very low lot size, and if I get a break below this level, I will. And all I do is just put an alarm in at around about there, so that if it gets near this level, I will be alerted. There's nothing on silver. I traded it up from here last week. It ran out of steam. The week before was when it went up. Just traded it off the bottom, hoping that it would have got going, but it just didn't get going. And again, I'm only trading small lot sizes. I don't know what this will do. This could easily come down and retest somewhere in here, and I'm all good with that. And if it gets really low again down here, I will buy it again down in here. Oil, just want to take a quick look. It is looking likely that this is going to go a little lower. Saudi Arabia are planning to bring more oil on tap this week. So if they do, and they're still fighting with Russia and the other oil producers, we could see oil easily go a lot lower than this. And if it does get it close below $20 a barrel here on WTI, I'll be dipping my toe with some little 10 cent or 20 cent sizes in lot size, and having a go and training it a little lower. There's got to be some great buys and trades once this is all over. Now I want to come to the US dollar index, and you can see that last week we just steadily came down day after day after day. And of course, looking at the New Zealand USD and the Aussie USD in particular, you saw those currencies against the US dollar rising. It wasn't because the Aussie was strong or the New Zealand was strong, it was because the US dollar weakened. That's very important to remember. So as far as the commodity currencies go against the US, particularly the Aussie and the Kiwi, I am looking to see them come lower. And now that the stimulation package is out in the States, my expectation would be to see this creep back up this week. And we could easily get, I don't know how high, but because the US dollar is the reserve currency in the world, and because it's seen that way, people are wanting to own it. So while this very volatile and unpredictable market is here, and the coronavirus is continuing to rage unabated, I think that we're going to see this move up. How high, I don't know. But keep an eye on this week, because once this thing starts moving up with any strength and positiveness, and it breaks this key level here, comes back, takes out this high and starts to move up, you're going to see Aussie USD weaken and the New Zealand USD weaken, and you're going to see the Euro USD weaken and the Pound USD weaken. And I will repeat, if we get this move up here this week and next week, that is the proviso. Okay. Stay safe out there. If you've got any questions, just ask me. You can still earn some really good dollars if you're careful. Number one, protect your capital, take your profit, lock it in when you get it. Don't get greedy, stay disciplined, stick to what works. And if what you're doing isn't working, then change it. And we'll see you in the chat room. Cheers.